Hey, welcome to the MTG Sold podcast. Today's episode is a little different. Normally, we do our weekly market recaps on Mondays, but today we're starting a new series called Direct to Consumer. In this series, we deep dive anything and everything related to MTG finance. Please enjoy. So, Hasbro reported its earnings this week, and something happened that I generally cannot stop turning over in my head. I want to walk you through it, because once you see what's actually going on, you really can't unsee it. Quick setup first. In case you don't live in this stuff, every 3 months, big public companies have to tell their investors how they did, how much money came in, and how much profit they kept. And before that report comes out, the analysts on Wall Street make their guesses on what the number will be. Then everybody compares what the real result is to the guess. The headline number people watch is earnings per share, EPS, which is basically the company's profit sliced up across all the shares of the stock. Bigger is better. This time, the analyst figured Hasbro would earn about 99 cents a share. Hasbro came in at $1.47. That is not a small beat. That is showing up to the test you studied for and getting an A+ when everyone expected a C. The profit was way ahead of what everyone had penciled in, and the stock went down. That's the thing I can't let go of. You smash the one number everybody's watching, and the market just shrugs and sells. So I went digging into why, and the answer turned out to be a lot more interesting than one earnings report. It's really the story of Hasbro turning into a completely different company than the one in your head. When you hear Hasbro, you think toys, Nerf, Play-Doh, Transformers, Mr. Potato Head, and yeah, Hasbro still makes all of that. But look at what's actually paying the bills now. The company is split into a few parts, and you could look at each one on its own. The toy part, the physical toys, brought in about $400 million last quarter, and it lost money, around $41 million in the red. Now here's where the money actually comes from. Hasbro owns a card game called Magic the Gathering. If you've never touched it, Magic is a collectible card game from the early 90s. You buy sealed packs, you don't know exactly which cards are inside, and you build a deck to play against other people. It basically invented the whole trading card game thing that Pokemon later took mainstream. That card game pulled in $582 million last quarter, and roughly half of it was straight profit. So stack it all up. The toys lose money, the card game prints it. Almost all of Hasbro's profit is coming from Magic cards and from renting out its brand names. The toys, the things the entire company is named for, in your mind, are running at a loss right now. The toy company is mostly a card company wearing a toy company's name tag. Okay, so back to the mystery. Great quarter, stock drops. Why? The reasons, and they're both a little subtle, so stay with me. First one, when a company has a monster quarter, you'd expect them to come out and say, things are going great. We're raising our targets for the rest of the year. Hasbro didn't. They beat by a mile and left their forecast exactly where it was. And when management does that, it's a tell. They're basically saying to anyone paying close attention, don't get used to this. Second reason, and this is the sneaky one, a big chunk of this amazing quarter was just timing. On the call, their finance chief admitted that some of the money showed up early. Card shipments that were coming anyway, landing in this 3-month window instead of the next one. So part of that A+ wasn't the business suddenly running hotter, it was money sliding forward on the calendar. And the people who do this for a living can tell the difference between we sold more and we just booked it a little sooner. One of those keeps happening and the other one borrows from next quarter. Put those two together and a great headline turns into a quiet morning of investors selling. The good news was already baked into the price, and the company itself was waving a small flag that said, careful. Now, here's the detail that actually made me sit up weirdly, and weirdly almost no one on the call asked about it. The CEO, Chris Cox, kind of offhand, mentioned that they've changed how they handle Magic cards. They used to keep a given card in print for about 1.5 to 2 years, and now they're stretching that closer to 3. And when something sells out, it used to take them 6 weeks to print more, and now it's 3 or 4 months. If you're not deep in this, that sounds like boring warehouse stuff. But think about what it actually does. They're controlling how much product exists and for how long on purpose. They're keeping things a little scarce so the cards people already own hold their value. Nobody rations Nerf guns to protect the resale price of Nerf guns, but that's exactly pretty much what a central bank does with money. And it's what Hasbro is doing with cards. And the CEO basically tells you why it works. He says his customers are, his word, patient. They're not ripping these packs open Saturday morning to play. A lot of them are buying sealed product and sitting on it like it's an investment. And when your customer treats your stuff like an asset instead of a toy, they don't get bored and wander off. They just keep buying more. So why is all of this happening right now? Because Magic is riding the same wave you've probably noticed, even if you've never played a single card. Think about the last couple of years. Grown adults lining up outside of Target for Pokemon cards. Sports cards selling for the price of a used car. Those little blind box figures where you buy a sealed box and don't know which one you're getting. And people are completely hooked. There's this whole moment happening where adults with money are buying toys and collectibles, half because it's fun and half because they think it'll be worth something down the road. The Hasbro CEO actually said something kind of wild that nobody picked up on. He thinks trading cards are about to be cut bigger than building sets. Building sets means Lego. He's saying cards are coming for Lego's crown this year or next. There's a slightly darker reason the whole toy industry is chasing adults, by the way. Fewer kids are being born. That's just the trend across most of the rich world. Fewer kids means a smaller market for actual kids' toys every single year. So the companies that want to survive are turning towards the customer who isn't shrinking, which is the grown-up. The nostalgic 35-year-old with a credit card and an empty shelf to fill. Hasbro's grown-up friendly stuff grew about 22% last year. And while the rest of the toy business actually got smaller, so Magic isn't just a lucky fluke. It's a preview of where this whole thing is going. Now, I don't want to make this sound like a short bet because there are a lot of real cracks. The big one is that the entire company is leaning on basically one product. Magic is carrying everything. That's fantastic right up until the day it isn't. And if you actually talk to Magic players, a lot of them are getting worn out. The company keeps cranking out set after set after set. Always something new. Always something limited you have to fight. You might miss. That works well until people burn out. And the day collectors stop being patient and decide to sell what they're holding, that same machine spins in reverse. Second crack. Hasbro got hacked back in March. A real breach. They had to pull their own systems offline for a while. The stuff that runs orders and shipping and billing, they're describing it very calmly now. $20 million, one-time cost, contained, no future risk, maybe. But we have watched this exact thing happen to other big companies, and the damage they admit to early tends to grow, not shrink. So I'd put no future risk in the we'll see column regarding the hack back in March. And the third crack, they're betting big on two large video games coming in 2027. Console games, built by outside studios, going into a video game market that has been brutal lately, with studios laying people off and budgets blowing up and big releases flopping. And the awkward part is, they're spending the marketing money now, which dings their profit today, for a payoff that's a year and a half out, not guaranteed. One more honest note, since we're being straight about the numbers. Almost everything I've quoted is what they call an adjusted number, which just means the company stripped out certain costs to show you a cleaner version. On the no makeup version, Hasbro actually lost money last year, about $322 million. Now, to be fair to them, that loss was mostly a one-time accounting. It was a one-time accounting write-down on the value of an old acquisition, not the business actually bleeding cash. So they still pulled in over 800 million in real cash from operations. So it's not a fire alarm. But anytime a company really leans on the word adjusted, it's worth asking what they're quietly leaving out of the picture. So that's the thing I couldn't stop thinking about. The headline says toy company has a great quarter. What's really going on is that a card game and a licensing business became the whole company, and the toys are kind of along for the ride now. The 50% beat is real, but a lot of it was borrowed from next quarter, and the company flat out refused to promise more. The stock, the stock dropping on good news wasn't the market being dumb, it was the market seeing the exact same thing we talked about and deciding not to get carried away. Hasbro isn't really selling you a toy anymore. It's selling you something to collect and hold on to. Whether that's the smartest move in the business or a tightrope walk balanced on one card game, I guess we'll find out next quarter. That's the show. If you got something out of it, send it to a friend. Talk to you soon.